Alright, stop trying to pick the next winning stock. Seriously, you're probably just wasting your time. The data is crystal clear. Most people who try to beat the market fail. But what if I told you there's a way to outperform 90% of investors with a portfolio that takes, and I'm not kidding, just 10 minutes to set up and manage for the entire year? It sounds way too good to be true, but it's not. In this video, I'm going to show you the simple, all-in-one funds that can automate your path to building wealth. This isn't about get-rich-quick nonsense or some risky gamble. This is about a proven, disciplined strategy that puts you ahead of the so-called experts with almost zero effort. So stick around, because the real secret to successful investing is a whole lot simpler than you've been led to believe. The problem: a game rigged against you. Let's be real for a second. The investing world feels like it's designed to be complicated. You've got talking heads on TV screaming about the next big thing, influencers on TikTok promising 100 times returns on some crypto you've never heard of, and news headlines that are basically engineered to give you a heart attack. The message is always the same. If you want to build real wealth, you have to be a stock-picking genius and a master market timer. But here's the truth they don't want you to know. It's a game that is overwhelmingly rigged against you. Even the pros can't win it. According to S&P Global's famous SPIVA report, which tracks this stuff, the vast majority of professional large-cap fund managers fail to outperform the S&P 500. Over a 15-year period, about 90% of them fall short. Think about that. These are people with fancy degrees, teams of analysts, and more data than they know what to do with, and this is where the frustration kicks in for so many of us. You spend hours researching companies, trying to decipher annual reports, and stressing out over earnings calls. You feel that gut punch when the market drops. You're glued to the charts, trying to guess whether to buy, sell, or just hide under your desk. All that work, all that anxiety, for what? For a strategy that is statistically proven to fail most of the time. The constant trading, the emotional roller coaster, and the high fees are a direct path to destroying wealth, not creating it. The simple beats complex philosophy. So if the professionals with all their resources can't win this game, what makes us think we can? The good news is, you don't have to play. There's a different path, a simpler, smarter way. This is where we look to the wisdom of investing legends like Warren Buffett and the founder of Vanguard, Jack Bogle. For decades, Warren Buffett has been telling pretty much anyone who will listen to just buy low-cost index funds. His whole philosophy is about keeping it simple and thinking long-term. In his 2017 letter to shareholders, he straight up said his regular recommendation is a low-cost S&P 500 index fund. He knows that trying to outsmart the market is a fool's errand. Instead, he argues for owning a tiny piece of many great businesses and letting the market do the heavy lifting. The goal isn't to find the needle in the haystack, it's to buy the entire haystack. Jack Bogle built his whole company, Vanguard, on this exact idea. He created the very first index fund for everyday people so they could stop betting on individual stocks and instead bet on the entire economy. His philosophy was that investing should be, well, boring. It should be automated, cheap, and for the long haul. The active stock picker is like a chef trying to make a different gourmet smoothie from scratch. They've got to source the freshest fruits, find the best protein powder, measure everything perfectly, blend it just right, and then deal with the cleanup. Sometimes they'll nail it and make a fantastic smoothie. Other times they'll get the recipe wrong, and it's a lumpy, disgusting mess. The simple investor, on the other hand, just buys a pre-made, perfectly balanced financial smoothie. All the best ingredients are already in there, mixed by pros in the right amounts, and it gives you exactly what you need every single time. That's the power of an all-in-one ETF. The solution: the 10-minute portfolio revealed. This brings us to the solution, the 10-minute portfolio. The engine of this strategy is the all-in-one asset allocation ETF. These are funds that, with a single stock ticker, give you a fully diversified portfolio of stocks and bonds from all over the world. You just buy one fund, and you're done. The diversification the rebalancing. It's all handled for you. A perfect example, and the one we'll use today, is the iShares Core Aggressive Allocation ETF, which trades under the ticker symbol AOA. AOA is basically a fund of funds. It holds a basket of other iShares ETFs to give you instant, broad exposure to the global market. What makes it aggressive is its split. It's designed to hold about 80% in stocks and 20% in bonds. Let's peek under the hood. That 80% stock portion isn't just the US market. It gives you the S&P 500, but also developed international stocks, emerging markets. The 20% bond sleeve is there to act as a stabilizer, holding a broad mix of US bonds. So with one click, now let's talk about the two things that matter most for long-term success: cost and performance. The expense ratio for AOA is just 0.15%. That means for every $10,000 you invest, you're paying a mere $15 a year for a fully managed, globally diversified portfolio. Compare that to actively managed funds that can charge 1% or more, and you see how much of a head start you get. High fees are a cancer on your returns. While past performance never guarantees future results, historical data shows the power of this approach. For example, a BlackRock fact sheet for AOA with data through the end of 2025 showed a 10-year annualized return of 9.84% before taxes. More recent data shows a 10-year return of 9.88% per year. You're capturing the growth of the global economy without any of the guesswork. The beauty of this is its simplicity. You can open a brokerage account, search for AOA, and place a buy order in under 10 minutes. Then, set up automatic investments to buy more every single month. A strategy called dollar cost averaging. That's the entire strategy. You've just built a portfolio that is statistically set up to beat the majority of active investors. And while AOA is a fantastic, no-fuss option, you have choices. If you want a fund that's a bit more flexible, the Capital Group Core Balanced ETF CGBL can shift its stock allocation between 50% and 70%. If you're more conservative and focused on preserving capital, the SPDR Bridgewater All-Weather ETF ALLW uses a different approach for different economic conditions. For most people getting started, if you're getting value out of this simple, no-nonsense approach to building wealth, do me a quick favor and hit that subscribe button and turn on notifications. My whole goal here is to cut through the noise and give you actionable strategies that actually work. Addressing your objections, I can already hear some of you thinking, is one fund really enough? Isn't that putting all my eggs in one basket? It's a fair question, but it comes from a misunderstanding of what this one fund actually holds. When you buy a single stock like Tesla or Amazon, yes, you are absolutely putting your eggs in one basket. But when you buy AOA, you're not buying one thing. You're buying thousands of things at once. You own pieces of Apple, Microsoft, international giants in Europe and Japan, and fast-growing companies in emerging markets. An 80% stock portfolio will be volatile. It will have ups and downs. iShares offers a whole family of these funds based on your personal risk tolerance. You can look at the iShares Core Growth Allocation ETF AOR, which is a classic 60-40 stock-to-bond mix, or even more conservative options. The 10-minute portfolio idea stays exactly the same. You just pick the single all-in-one fund that fits your timeline and helps you sleep at night. The biggest mistake investors make is thinking that simple equals ineffective. In investing, the opposite is true. Simple is smart, simple is disciplined. It's the complexity, the constant tinkering, and the emotional reactions that get people into trouble. This strategy is designed to protect you from your own worst enemy, yourself. The secret to beating 90% of investors isn't some secret algorithm or a higher IQ. It's having the discipline to tune out the noise and stick to a simple, proven plan. Stop wasting your time and mental energy trying to find that one magic stock. Instead, take 10 minutes. That's all it takes to set up a portfolio that does the work for you. An all-in-one ETF like AOA automatically diversifies your money across the entire globe, keeps your fees incredibly low, and lets you benefit from the long-term growth of the market. Investing shouldn't be a stressful, unpaid full-time job. It should be a tool tool that serves you. Buy the haystack, hold on for the long term, and let the market work its magic for you. What are your thoughts on this lazy portfolio strategy? Do you use an all-in-one ETF in your own investing? Let me know down in the comments. And if you want to learn more about the building blocks of these funds, check out my other video breaking down the 3-fund portfolio. Thanks for watching.